What is DeFi? If you've ever searched how to earn passive income with crypto, or wondered why people are so excited about Web3 and decentralized apps, you've probably come across the term DeFi, short for decentralized finance. But what does DeFi actually mean? Is it really the future of finance? How does it work? And can anyone use it? In this video, we'll break down everything you need to know about DeFi, in plain language. 1. Traditional finance, how money works today. Let's start with the world we already know. In today's financial system, everything runs through centralized institutions. Think about it. When you want to send money, you go through a bank. If you want a loan, you apply to a bank. Even when you earn interest or use your credit card, a centralized entity is involved. These institutions act as middlemen, charge fees, set rules, control access, and while they help provide stability, they also create barriers, especially for people without access to modern banking. This is where DeFi flips the script. 2. What is DeFi? Decentralized finance. DeFi stands for decentralized finance, a new financial system built on blockchain technology, especially Ethereum. It removes banks, brokers, and financial institutions from the equation. Instead of trusting people or companies to manage your money, you use code, specifically smart contracts. So what does that mean? With DeFi, you can send and receive money instantly, earn interest by lending your crypto, borrow assets without a bank, trade tokens without a broker, own assets in a completely digital, transparent way, and you don't need a credit score, an ID, a bank account. All you need is a crypto wallet and internet access. 3. How does DeFi work? Simple explanation. DeFi works through smart contracts, pieces of code that automatically execute when conditions are met. For example, if you deposit crypto into a DeFi lending platform, a smart contract might automatically match you with a borrower and start paying you interest. If you trade one token for another on a decentralized exchange, DEX, a smart contract ensures the swap happens instantly and securely. These smart contracts run on blockchains, distributed networks that are immutable, transparent, accessible to anyone. No one can change the rules mid-game. Once deployed, smart contracts do exactly what they're programmed to do, no more, no less. 4. Real-world examples of DeFi in action. Let's go over a few key use cases that are already live and growing. A. Lending and borrowing, Aave compound. You can lend your crypto and earn interest. Or you can borrow assets by locking up your own crypto as collateral. There's no bank, no approval process. It's all automated through smart contracts. B. Trading tokens, Uniswap, SushiSwap. Instead of using an exchange like Coinbase or Binance, you can trade tokens directly with other users using a decentralized exchange or DEX. These platforms use automated market makers, AMMs, and liquidity pools. More on that later. C. Earning yield, Yearn Beefy. DeFi lets you earn yield by farming, staking, or pooling your assets in smart contracts that generate returns. It's like a high-tech version of saving accounts, but faster, riskier, and with higher returns, and sometimes higher losses. 5. Why do people use DeFi? Benefits. People are drawn to DeFi for a few big reasons. Open access, no ID required. Anyone can participate. Transparency. You can see all transactions on-chain. Ownership. You control your private keys and your assets. Passive income. You can earn interest on idle assets. Innovation. New financial models are emerging faster than ever. It's like finance for the internet generation. Permissionless, global, and fast. 6. Is DeFi safe? Risks to know. No financial system is perfect, and DeFi has real risks. Smart contract bugs, code can be exploited. Scams and rug pulls, projects that disappear overnight. Volatility, crypto prices change fast. Lack of insurance, no safety net if something fails. User error, send money to the wrong wallet, it's gone. This is why it's important to do your own research, use trusted protocols, and never invest more than you can afford to lose. 7. The role of Ethereum and other blockchains. Most DeFi apps run on Ethereum, the leading blockchain for smart contracts, but other networks like Binance Smart Chain, Polygon, Avalanche, Solana are also competing for DeFi dominance. Each has trade-offs in speed, cost, and decentralization, and new projects are launching across all of them. 8. Future of DeFi. DeFi is still new, but growing fast. Billions of dollars are now locked in DeFi apps. Major institutions are exploring tokenization, stablecoins, and on-chain lending. Some experts believe DeFi will disrupt banks, power new economies, make finance more inclusive. Others warn that regulation, security risks, and market crashes could slow it down. Either way, DeFi is no longer just a trend. It's becoming a core part of the crypto and fintech landscape. 9. Final thoughts. So, what is DeFi? It's a bold experiment to rebuild financial services using blockchains and smart contracts instead of banks and middlemen. It offers freedom, transparency, and global access. But it also comes with new risks and responsibilities. If you're new to DeFi, start small, use trusted wallets like MetaMask, learn about platforms like Uniswap, Aave, and Curve. Never skip the research. And remember, this video is for educational purposes only. This is not financial advice. Thanks for watching. Now you know exactly what DeFi is and why it matters. If you found this helpful, subscribe to DeFi Sketches for more visual explainers, simple tutorials, and deep dives into the future of decentralized finance.